Hello, all my lovely people from all over the world. Hey, Andy in Australia and our great mods, T&D Tesla and Sean Donnelly and K8 and everybody else. This is a monster Q&A. We're going to touch on so many things that are on the minds of the community. And again, I'm only as good as the community because the questions come from there. So we'll look at top identification, AltSeason. We'll look at MATIC to Paul. We'll look at Arbitrum, a whole bunch of ETH layer 2 questions. And I'll say the same thing I've said for years. We'll look at profit-taking strategies again, whether we should keep or hold, mastering covered calls, and have we found a new MicroStrategy? And it's not what you think at all. Gamma squeezes, Bitcoin options from BlackRock, and so much more. Let's get into it. And not financial advice, of course. Thank you to everybody on Patreon where all these great questions come from. Because it's a monster show, 60 nuggets, we've got to go fast. I'll never waste your time. Thank you all for coming once again. Has subs. James, longtime listener, first time reaching out. With expectations of bull run beginning to heat up, I was wondering, when do you anticipate the peak of the bull run? Do you follow any data which suggests you to lean on a time frame, or is it something you look at week on week? I have a large alt position and I want to make sure I am in long enough without jumping out too early. Eager to hear your feedback and thank you for all you do. So, my thing is never make the same mistake twice. And I will spend extraordinary amounts of money to make sure that doesn't happen. All right. And I share it all with you. So first thing we've done, the peak identifier is called the top and bottom indicator, the TABI model as we refer to it as. And this tells us when we're getting overheated. Very important. Right now, we're just above lime green, a little bit of yellow. We got to go orange, dark orange, and red before we start getting nervous. This will help us identify if we're getting close to the top. In addition to this, we've also optimized not only the layer in strategy, but also the layer out strategy with the new profit-taking model, which is one of the coolest things ever. I'll show that a little bit later today. And I promise I got a lot of meetings next week. But I promise to do a masterclass on that too with a live Q&A for people out there. Also, regarding alts, first of all, you shouldn't be all in alts. Sounds like you are. So that's a little bit scary, and I hope you're in the right ones because remember, you got to be in the top 1% of assets. But this is very important. And as usual, for years, you've heard me say, like a broken record, this time is different. So much is different this time around. Let me walk through a couple of things that I see. First of all, AltSeason, in the old days, it typically follows periods of significant Bitcoin growth. And then the investors get clever and they shift their profits from Bitcoin into alts. They also do this because they want to get more gains. Sometimes Bitcoin doesn't move as fast as other assets. Remember, smaller assets run faster. Also, AltSeason Index, which I share on Okta every Tuesday, above 75% indicates AltSeason is kicking in. We are nowhere near that yet, but it can happen fast. Also, ETFs, Bitcoin ETFs, have an outsized impact on Bitcoin's price. Therefore, everything's a little bit different this time around. The on-chain data is different. The impact of the ETFs is having a different impact on Bitcoin, which means things are not exactly the same for the altcoin market. Also, increased altcoin maturity and performance. This is a very important thing. Last time around, the alts were very unbaked, let's call it. This time around, they're very, very real with real world use cases, great product market fit, world-class adoption, and so much more. It's different, much more mature, and these assets have the power to grow into being very big assets. And we also have institutional interest in alts for the first time ever. That didn't happen 4 years ago. So the other thing that's important to note too, expect the winners to outperform. If you look at a solid BTC chart, you'll see AltSeason is already there, has been there for a year and a half. Remember, be in the right assets. We'll talk more about some of those in a minute too. So we don't know exactly where we're going to go, but we do know when Bitcoin will top, and we do know when AltSeason will kick in. But I don't expect it to be the same as previous cycles. But we are tracking this not just weekly, not just daily, but literally. There is hardly an hour that goes by where I do not look at the charts. All right? So we'll be on top of it. Don't worry. Next question is from Sujo. I want to send you a quick message. Thank you for your videos. And I love how you answer complex questions in such a clear and concise way. Well, I hope so. There's no need to overcomplicate things. And I always say the best things are simple things. Now, I also have a question about my current strategy. My goal is to increase my Bitcoin holdings to 3.5 Bitcoin by 2028. To achieve that, I'm planning to sell everything, including various altcoins, at the next bull run peak, and then buy back in during the bear market, focusing only on Bitcoin. What do you think of this strategy? Is it risky? Would you sell all of your SOL in that case too? By the way, I will also use your DCAS tool to reach my goals. So you're doing a lot of the right things. So congratulations on that. But there's a couple of things you need to know. First of all, never be all in on one thing. I don't do heavy diversification, but I do kind of like diversification, at least 2 or 3 narratives and 1 or 2 winners from those narratives. It's very, very important. Second, there's a couple of things regarding the plan to sell everything, and I don't want to burst your dreams. It's a novel case, but remember, this time is different. I still believe there could be a small chance of a perpetual bid for Bitcoin because of these ETFs, especially with the amount that was purchased just this week. 17,700 Bitcoin from 9 ETFs in 1 week. In 5 days, in fact. Think about that. How long can that happen? How long can that go on for? And remember, as Bitcoin price goes up, it'll become its own marketing machine and more people will FOMO in. But let's talk about this. Never sell all. I'm a big believer in this. It can lead to missed upside. So important. The old adage is let your winners run, sell your losers. But selling a portion will also help you lock in some gains while participating in future growth. By the way, this ties into the previous question too. Also, selling all may trigger a large tax bill. I don't know if you're in a tax-free environment. If you are, good for you. But selling incrementally can help spread out the tax impact. Also, you always should be in the market no matter what. Never go, like the only time in recent history for me, probably in 10 years that I left the market was back in December 2019 because I had inside baseball on C19 and I knew it was going to be a poop show. So I moved all to cash. Anyway, but being all in cash, getting out of your assets leaves you with that exposure to those assets, especially if they continue performing well, it can be a bad thing. Also, maintaining some position allows you to benefit from ongoing momentum. In addition, it can be psychologically difficult to time the perfect exit. I pride myself on that, but still, it's not easy. What is easier is scaling out or gradual profit taking. We talk about layering in, scaling in, layering out, profit taking, scaling out. These are important things. And that's much safer and much more strategic, much more data science proven than trying to pick the exact top. Also, emotions sometimes get into play here as well. Making an emotional decision to sell everything at once is extremely difficult and can result in stress and can result in a mistake. So therefore, we have built, again, not just the top and bottom indicator, but the profit-taking model. And here, just using the basic defaults for Bitcoin, it shows Bitcoin going to 120K, and it shows you how much you would sell. Imagine you had 1 Bitcoin. Basically, this means you retain 41% of your Bitcoin. You never sell it all. Always keep at least 1/3 of it. In terms of your alts, make sure you're in winning ones. If you are, let them ride. Let them ride. It's still early yet, so I hope that helps. Next question, a long one. Hey, James, wave grinning and handshake. I want to express gratitude for your work, YouTube channel, and instruments you have built. And the vibe, of course. Appreciate it. I have a position in Arbitrum, about $50,000. I purchased at $2 in March 2024. Well, buddy, you nailed the top. See, not only is it hard to nail the top selling, it's hard to nail the bottom buying, but sometimes people figure out how to buy the top too. So anyway, that was quite possibly, actually, I think it was the exact worst time to buy Arbitrum. Anyhow, my expected return on ARB is about 150 to 200,000. So you expect to make 300% on this from your $2 cost basis. I feel like I'm going to be throwing a bucket of cold water on you, Sergey, I'm afraid. But now I'm thinking of selling it back to market at the same price when it gets there and allocating into something better than ARB. What course of action actions do I need to take to increase my odds of winning more efficiently? Reinvest in a better coin, e.e. something from the SOL ecosystem. So much here. Sergey in Canada, probably from the Ukraine. Hope you're doing well. There's a lot to unpack here. And these are lessons that I have to continue hammering home. I had a conversation with somebody during the week in Patreon, and they're still holding to Polkadot. You know, same thing. They bought high. They're holding on to it because they have hope. All right. I'm going to share, once again, hope is not a strategy. And I thank you for this question because you are not alone. You are not alone. But I'm going to share stuff that you've all seen before. First of all, this is the ARB Bitcoin chart. Okay? Nothing but down. Going back to our previous question, why not just hold Bitcoin? Well, you would have been a hell of a lot better off than holding Arbitrum. Now, I'm going to share some nasty, ugly, vicious truths here, what I've been saying for years. So it should come as no surprise, but new people to the channel may be offended. But I don't care. I'm here to help people, not pretend hope is a strategy. Next, Arbitrum is on level 1 on the ATR model, which is basically just above zombie level, which is very scary, especially considering we are over halfway through the bull run, everybody. And again, from history and analysis, this is the scariest piece. You've seen this before. This is my red box. This is the zombie zone. This is when we are halfway through the bull market and things are still more than 60% away from all-time high. If you've seen my stuff, you've seen this many times. This is from the Crypto Compendium. And remember, many in the red box will never get back to all-time highs. And I can give you 8 years. I can give you 6 years. I can give you 4 years of proof points from multiple cycles that this holds fast for most. We're talking 80 to 90% of coins. There is the odd anomaly. Aave being one this time around. Old coin did very well so far. Still, though, let's see how far Aave is from all-time high. It's still nearly 80% from all-time high. Arbitrum here is 73.24% from all-time high. All right? If you are in these names, again, here's the bucket of cold water. Ready? You will sit and wait for this thing to get back to an all-time high. You could be waiting 8 years, and it'll never do it. Okay? Look at XRP. Look at Cardano. Look at all these things. They're dead zombie coins. Now, Arbitrum is not dead. It's still used. Nearly 500,000 daily active users. But again, as I've been saying for 3 years, simplicity, first principle thinking, always told me layer 2s are a Band-Aid. Okay? But now they're a Band-Aid on a sinking ship. Because, and this graphic is just perfectly beautiful, there are so many of them. There's a new level 2, layer 2 being developed, launched every 19 days. They're all cannibalizing each other. They're all cannibalizing the mothership. And they all have lots of fundamental problems that we've covered many times. I have no layer 2s. Last time I had a layer 2 was MATIC in the last bull run. That was it. And as usual, I do my little window cleaning at the end of every year and it was gone. Be in the winning names. Last chart I will share with you. This is SOL ARB. Not ARB Bitcoin. SOL ARB. And you can see here, drastic overperformance. Okay? That's where you need to be. Be in the top 1% of assets. Do not hold onto these things. Do not hold onto them. People cannot sell. They are married. It's like they're locked in a prison. I think Marty said Stockholm Syndrome or something. They fall in love with their captor. They won't let go. Learn to let go. And I promise you, you'll look back in 6 months or 12 months and you will not regret it. A lot of people have a hard time selling. And the psychology is, I know as soon as I sell, it's going to pump and go to the moon and I'm not going to make all my money back. That can happen, but it's very rare. We're talking less than 5% of cases. This is how I view the world today. This is how I view the world since 2022. Has not changed, and I've been right. So, hope that helps. Next question. That was a big one. Sorry for all the buckets of water there. Hey, James and team, longtime member follower. First question. There is a company in Canada with ticker HODL named Cypherpunk. who has rebranded to Sol Strategies. They seem to be playing the MicroStrategy playbook, but instead of Bitcoin, they're putting Sol on their balance sheet. It'd be interesting to see James's take on this. Do you have value as a strategy or simply a marketing scam? Thanks and keep the awesome work. I appreciate the amount of work and dedication. Well, this is the other reason I love doing these questions, because I find things that are super interesting. Thank you for bringing this to my attention. And yes, it's small. Let's analyze what this company is and what they have. I tried to throw it all into a little spreadsheet. They have 86,294 Sol. They have 56.3 Bitcoin. They have earned 230 Sol since June 14th from staking. They had some shares they sold. They got some private equity and other venture capital. All the other stuff I kind of ignore. They only owe $115,000. They got 50,000. So call their net debt 65 grand, which is nothing. And the current price is whatever. Now, the most interesting thing is, let's look at two of their bags and find out what they're worth. And then we go back and look at another comparison. HODL bags, 86,294 Sol is worth $13.72 million US dollars. Bitcoin is worth nearly $4 million. You add these two together, you got $17.5 million. That's 23,666,000 Canadian dollars. And you can't make this up. This is the exact FX conversion of that amount of dollars into that amount of Canadian. And 666 is actually a good luck number in Asian culture for health. So I like it. And other religious stuff, sometimes it's a bad number, but I prefer the Chinese interpretation of 666. So I hate to spook anybody that believes in it. Now let's look at this. It's the most important thing. All right. First of all, they have called it 24 million Canadian worth of just Bitcoin and Solana. The market cap is only 26 million. The intrinsic value of that firm is $2 million Canadian. Okay. What happens when Sol and Bitcoin pump? The market cap pumps too. So absolutely, yes, I like it. I'll be having a look at this one on Monday. So thank you for the brilliant question. And shout out to everybody in Canada too. You guys are all so wonderful. Worm F-16. It's an F-16 fighter jet worm. Hello, James. Thank you for what you do. You are a touchdown and professional in every respect. I don't know what that means. Maybe football. Anyway, Clean Spark question. I received a proxy vote request, and item number 1 requests an increase in the number of shares of common stock for issuance from 300 million to 600 million shares. The board's recommendation is yes, but it seems this will further dilute stock. What are your thoughts on this proposal? I'm going to be harsh here. All right. I am sick to death of minor dilution. Yes, it's okay to dilute in the bear. Invest in rigs. Build out your hash. You know, sell off your Bitcoin. But not halfway through the bull. This dilution has to end. Here is our own proprietary dilution model, which calculates the exact amount of dilution for every asset I can configure any date and time. I happen to choose January 1st, 2024. So call it 9 months into the year. And you can see, number 1, Iris Energy diluted 158.51%. CleanSpark, 41.57%. Wolf, 38.26%. BTBT, 38%. Bitfarms, 36%. Sphere, 35%. Like, they're all just diluting. Now, granted, CleanSpark is the second worst offender. And I also, for giggles, I put MicroStrategy in there, 19.32. But we know they are doing ATM to issue shares to buy Bitcoin. In that case, it works. And we've seen how it works. We'll talk about that in a minute as well. But this is not good. So, and as a quick reminder as well, as I always say, mining is a cutthroat business. Never have more than a 5% allocation to miners. My current allocation is less than 3% right now. All right? Remember that. This will bleed you alive. Bleed you alive. You wonder why the stock price isn't going up and the Bitcoin price is going up. It's because of the crazy dilution that is just incessant. All right? Lesson learned. And I plan to get out of these things before the end of the bull. First thing I will sell will be Bitcoin miners before anything else. Mark my words. So, vote no. Next question. Joe F. Hi, James. Do you think IBIT gaining SEC approval for options could end up negatively impacting MicroStrategy? Thinking this could pull a lot of liquidity into IBIT that would have previously gone to MicroStrategy. Love your content on Patreon. Thank you, Joe, for being here. First of all, we've heard this before with the ETFs. The FUD that I had to deal with since late 2020 for MicroStrategy. Well, late 2020, nobody understood what MicroStrategy was, except for, at least I did. But since then, it's just FUD. People afraid. People saying, oh, there's a premium. The ETFs are going to kill it. Did I sell one share? Nope, not at all. Who's laughing now? Now, it has been a volatile ride, but I shared this yesterday. A simple little model here shows you the price of Bitcoin at $66,000 and the price of MicroStrategy when Bitcoin is at $66,000. April 23rd, $133. May 16th, $144. June 17th, $150. July 30th, $160. September 27th, $176. All right. It keeps going up because they keep buying Bitcoin. And this is what few people actually get. This is the potential for new Financial Accounting Standard Board rule coming into effect in December 2024. Basically, it could trigger a $9.2 billion gain on their Bitcoin bags across 202 million shares outstanding, a gain per share of $45. This is the infinite money glitch. You borrow money at 0%. You issue shares to buy Bitcoin. Bitcoin goes up in value, and so everything goes up in value. Of course, until the point where Bitcoin stops going up in value. Then we get into hot water. But we'll be ready for that too, as well. So that's when hedging time comes to go. So will BlackRock ETF absorb this? No. More money is coming in. There's rumors as well flying around that the Swiss National Bank, Central Bank of Switzerland, is buying MicroStrategy shares or bought them in June or July or whatever. I'm not sure of the exact time frame, but we'll see. Again, it's another black hole. We like black holes. Black holes are great. Next question is from Valuable. I have a tax-free account with $5,600 balance and I want to use for options trading. With such a small amount of money, how would you approach growing this cash over the next 5 years to achieve $500,000 in value? What assets would you buy and what option strategy would you implement? And the account is a Schwab account and I will paper trade first. Good. Always paper trade first. And build a system of rules. Good. You need rules in a process. And subscribe to your tool suite to achieve these goals. Thank you for all you do. Such a pleasure. And I love this question. And I made my start doing covered calls in the 90s. And then I got a lot more sophisticated. So you're starting in the right place. You're saying all the right stuff. Paper trading first. Find your rhythm. But let me show you a little shortcut. I analyzed probably 100 of my top names. I've got this big master list of kind of disruption that is very little downside, but upside. And I came across SOFI as being, if somebody held a gun to my head and I had to do cover calls on one stock right now with $5,600 and I had to make it, it would be this stock right here. SOFI, let's break it down. Let's look at the chart. Again, you can see here the trend is right 96% of the time. The confluence model is right 100% of the time. We're on the 12-hour time frame. And the ATR backtest is right 89% of the time. You can pick any of these tools and you can make it work for you. It's real simple. You wait for a little green flag. Make sure the trend is going in the direction you want, i.e. you want for it to turn. Okay, that's when you buy. So right now with the price of SOFI at like $7 and change, just like less than $8, with your money, you'll be able to buy 600 shares, which means you can do 6 calls. But there's a twist. If you use margin, you can do 1,200 shares. Okay, you borrow half, etc., and you can double your bag. Therefore, you can do 12 contracts. On 600 shares, if you sell the November calls for about $1, you can make 12.5% every 4 to 6 weeks. And if you use margin, you can make 25% every 4 to 6 weeks. The key is be very consistent. Even if you're only making 10% every 6 weeks, that's good enough because compounding will take care of the rest. All right. Have a process. You buy on the green triangles, wait for the trend to turn. Then on a spike, you see the red sell signal. That's when you sell the covered call. Ta-da! And then you sit and wait. If you get called out, that's fine. Then you just get jump back in. But there you go. There's your process. There's an example of an asset. Now, when I first got started too, there's something very important because I also had no money. Nothing. All right. Nothing. So I probably had 10,000. And I made a point of focusing on stocks that had about a $10 price or sub $10 price that were also volatile and also followed a range. Look for the range riders, look for things around $10 or less, maybe a little bit more, and the volatility. And that's it. It's stealing candy from a baby. Hope that helps. Next question from Mints97. Hi, James. I've used your knowledge to choose the best assets, but you will not be here forever to aid me, and I would like to learn how to think like you when choosing the correct asset. So this is, again, so important. Like we said at the beginning, you got to be in the top 1% of assets. Don't futz around with the other 99%, but you got to do a crap ton of upfront work. Let's break this down. I put together for you a step-by-step framework, and it goes beyond not just assets, but you got to look at narratives first. So we're going to look at step-by-step framework for what I call disruption identification. Every 10 years or so, a big disruptive force, sometimes every 20 years, a big disruptive force comes along. And you need to be ready for that. Okay, so first of all, develop a deep understanding of disruption, what it is, what type of forms can it take, etc. For example, my key focus areas since 2022 have been AI and crypto blockchain. That's it. And also learn to distinguish between genuine innovation and hype. Remember, crypto, 99% is complete garbage, and most of the stocks will not keep your head above water, i.e. make more than 14%. Also, you always hear me say, follow the money. Look at the best early stage venture capitalists. Watch what they are playing in. Now, they don't always get it right, but they get it right most of the time. Okay? And then look at corporate investment growth in a sector. For example, AI has been through the moon. And then find out who is going to make most of the money. So far for AI, basically all the money's been made by NVIDIA, and that's why you hold NVIDIA. Now, next is analyze market adoption and integration. So look at consumer. Basically, you could have the best, say, something else other than AI, but if there's no adoption, it's nothing. That's why I always not only follow the money, but I always look carefully at adoption and also look at the impact on existing business model. For disruption to exist, it has to break stuff. You can't make an omelet without breaking some eggs. Identify what eggs will be broken. And that's where you want to play. If no eggs are broken, there's no disruption, there's no opportunity. And look at mindshare as well. Very important. Many sources of this. There's been a 6,300% increase in AI mentions and mindshare over the last year and a half. Then you look at infrastructure and ecosystem, like if it's NVIDIA, you look at the chips. If you look at Bitcoin mining, who is building out the most scale with the most modern rigs at the lowest price, etc. You look at growth. Then you look at the key players like NVIDIA, Tesla, find AI leading in AI, the leaders in AI. And then you have your geopolitical and economic factors. So this kind of takes a step back, but understanding exactly what the world needs. There's so much happening right now that, for example, aging populations, humans there's not enough of them to do the work that's needed. Therefore, massive opportunity for bots. Bots over the next decade will be probably the biggest thing. And bots also includes vehicles on wheels and, of course, Optimus and other things. Wait for 1010. We expect to see some bots in some form or another. That's where you want to play. So if you have a 10-year time frame, position yourself now for bots. And you know what I'm doing for that regard. So that's how I look at things. It's a methodical approach. Identify what the next big narrative will be. Get in early, get in hard on the winners, not the also-rans. So remember, all the money goes to the top 1%. Next question from BMan63, and he's in the audience as well. Hi, James. I've heard you say on several occasions that you want and need for security to have options available for liquidity purposes so that large players can move in and out of a security. And with that in mind, why do you think Semler doesn't offer options and it's difficult for them to add? So this is and compared to MicroStrategy that has options. Super simple question. And I would have bought Semler if they had options. I identified it the minute they followed the MicroStrategy Bitcoin strategy, but they didn't have options, so I didn't buy. But the Patreon post is there to prove it. And it would have been very nice return too. Same thing with MetaPlanet and OneMed or Bio1Med or whatever it is. All doing the same thing. All get a nice pump in stock. But the three simple reasons why Semler doesn't have options: low trading volume, liquidity, small market cap, and regulatory or exchange requirements are not fulfilled. It's that simple. And that's where we are. So not everything gets options. Small things like some of the, like the Solana strategy, no options. And you guys got to wait for things to have a certain critical mass before they can get there. Thank you, B-Man. Now, it's prime time. Now that options are coming to IBIT, what will be the impact on price? Jeff Park from Bitwise tweeted, "This will be the first time in the financial world we will see regulated leverage on a perpetual commodity that is truly supply constrained, and that is a game changer and will add massive fuel to the fire." But there's more. Everybody's asking about IBIT. With BlackRock approved for options, do you expect other ETFs to do the same? If not, there won't be a sell-off like GBTC in order to get into BlackRock. IBIT, I would love to be able to do options, but I'm only an ARK-K and BITB. I would definitely sell my positions going to BlackRock if I cannot have options in my present ETFs. And Joe F., do you think IBIT gaining SEC approval for options could end up negatively impacting MicroStrategy? No. So we covered that before. Everybody is concerned about this. This is, as soon as this got released, so a lot of people saying, oh no, now they're going to basically create a whole bunch of paper Bitcoins, going to put a lid on price. It's not going to do anything. No, not at all. This is what I believe will happen. First of all, it's a big net positive. And I do agree with the Bitwise team as well. There will be increased liquidity and, of course, a lot more trading volume because it will attract more institutional investors and traders to IBIT, increasing its liquidity and trading volume. Remember, I didn't buy Semler because there's no options. I'm like a mini institutional investor. No options, I'm not touching it. Now, this should open the floodgates. And this will also bring about tighter bid-ask spreads and lower transaction costs too. Also, it is an advantage over other BTFs, Bitcoin ETFs. I said BTFs, that's funny. Yeah, I mean, if I was in FBTC and they had no options, I'd move over. But I do believe, in answer to the other question, I do believe the SEC will be forced to approve the other ones too, starting with Fidelity because they're big. And we'll see. But remember, guess who works for Uncle Larry? The SEC does. Whatever he wants, he gets. Okay, he picks up the phone, make it happen, they do it. All right? Oh, there. SEC does BlackRock's bidding. The very last point. It'll bring about enhanced risk management, also hedging. And also, most excitingly as well, it could bring about a big gamma squeeze as well. So the introduction of options could potentially lead to a gamma squeeze scenario. And this is where rapid price increases in Bitcoin will cause market makers to buy more of the underlying asset to hedge their positions. If they're caught with their pants down, they gotta go and fill their boots so they don't lose everything. And this could amplify price movements and potentially increase volatility in the Bitcoin market, and also a massive gamma squeeze that we've seen happen in many assets like GameStop and Tesla a few times as well. And a lot more institutional participation in Bitcoin. So all in all, it's all goodness all over the place. And here's another quote. Bitcoin ETF options set the stage for GameStop-like gamma squeeze rally. Bitwise predicts. Many people predict this as well. So it's a positive, everybody. And yes, the big money will now be buying IBIT, not anything else, until the others will get it too in time. So we'll see. Next question from Astroman123. What would you do after 10/10, which is October 10th, if you had some Tesla in a tax-free account? Would you be selling covered calls, buying puts, do both, or do neither, and expect Tesla to go up even more? There's a couple of things that are kind of interesting here. First of all, I would look at one of my favorite pairs, which is Tesla MicroStrategy, which is now getting back to kind of the middle of the road level at about 0.69. And we'll see. But most importantly, for me, in a non-tax-free account, if you're in a tax-free account, etc., you know, most events like this are kind of buy the rumor, sell the news events. However, even Elon is hyping up things, and he knows not to hype up things. Like, he didn't hype up the Cybertruck event or anything like that. But what I would be looking for is a big explosion in mean reversion to hit at least 2 standard deviations to the top side. Last time we had that was late 2020. That's the type of spike I'd be looking for to consider hedging. And remember, I consider Tesla to be the most important asset that I hold right now. As you know, pair trade of the decade, I did on 4th of July. That's been on the money too so far. This is the narrative we spoke about coming previously regarding bots. That will be the biggest disruption this planet has ever seen. The next 10 years, it's going to be quite dramatic. Mark my words. We will never witness in our lives so much technological advancement. Again, mark my words. Read these lips, or whatever they say. Anyway, so for me to think about hedging or put my bag at risk, I would need a lot of standard deviations on mean reversion before I do that. So hope that helps. And again, if it is a sell the news event, we'll see. If you're in a tax-free account, maybe move it to something else, that is oversold at the time. And that's also a safe way to play it too. Next question. It's been a while from Dakara. If stablecoins are pegged to the US dollar and the US dollar is debasing, then aren't stablecoins debasing as well? I love this question. Yes. Yes, they are. But remember as well, stablecoins are used for liquidity to move out of like crypto into a temporary cash position and then back into something else. So they do have a purpose for liquidity in the crypto market, but you do not want to hold stablecoins long term, unless of course it's a nasty bear market or something. So you're dead right, it debases. And even if you're holding dollar value, it's debasing at 14% per year, which I've proven many times. And be careful of that. That's not good. Next question is from Git. And by the way, doing lots of quick fire questions, cover as much ground as possible. Let me know if you like this or you prefer longer, detailed ones. But this one, 18.6-year real estate cycle. Lots of people on YouTube talk about the 18.6-year cycle, which I know you've said you don't buy into, but would you mind explaining why, and if possible, to back it up with source of data? I hope you choose this question. Of course I do, Git. So let's talk about this. And yeah, no offense to the people that make a living from making YouTube channels about an 18.6-year cycle, but it's nonsense. Bloody hell. I mean, the crypto world changes day to day. You can't sit there and wait 18.6-year cycles. So first of all, I do believe it's complete folly. It's like Mystic Meg or something like that. Yeah, good luck. Also, the data behind why it is folly, it's like the way I could take C19 data and map it into a Wyckoff chart. I did that once before in a video too. It was kind of fun. But this is why I don't believe in the 18.6-year cycle. First of all, it has gained traction with some people, but there are many reasons why I think it's very questionable and also very unreliable. Now remember, you can always back a chart into any cycle. That's not hard to do, but it does oversimplify complex markets. So the real estate, for example, is influenced, and a lot of people tie this not just to markets, but also to real estate. But real estate is a function of factors like local economies, government policies, demographics, technological advancements, and simplifying this complexity to a single cyclical pattern ignores the diverse forces at play. I'm going to just give another little anecdotal story about real estate and what happened in the United States. So let's go back to March 2020. We all know what happened then. People were living in a state like New York, and all of a sudden there was a clampdown of rules and certain passports were required to get a meal and all that crazy stuff. You know what they did? They got the hell out. They went to Florida. Tax-free state, cheap real estate, yada, yada. Do you think the 18.6-year cycle took account of this? No. But there's more. And then Florida had these hurricanes. Recently had one a few days ago. All the carriers, the insurance companies, left the market over the last couple of years. It's very difficult. If you're in a hurricane alley, it's very difficult to get homeowners insurance. Therefore, you can't get a mortgage. Therefore, the only people that have property down there are paying cash. And that's the other problem. And also now people are actually rotating back to the places from where they came. So now there's a glut of condos in Florida. There's a lot of real estate that can't be insured. You got HOA fees going to the moon because the insurance is so high, and it's just basically become prohibitive to live there. Do you think the 18.6-year cycle takes that into account? Nope. Okay, so that's the first part. Sorry for drilling into that a little bit. Then, that's the oversimplification piece. Then relevance, again, changing economic realities make a fixed cycle very unlikely. And then you have a whole concept, confirmation bias. The theory popularity on platforms like YouTube are driven by confirmation bias, where believers focus only on the data that supports their views while ignoring contradictory evidence, like I just talked about with Florida. And there is no scientific consensus. The 18.6-year cycle isn't widely accepted by mainstream economists or real estate experts, and most rely on broader indicators and methods to forecast real estate trends and market trends, not just a fixed pattern. And could it be a self-fulfilling prophecy? Well, if enough people believe in and act on the cycle, it could impact market behavior. But this does not validate the theory's underlying accuracy. So, again, cue Mystic Meg, folly. But there's more. This is important. This is what matters to cycles, right? Liquidity, yellow line. This is a Bitcoin chart. The red shades are the basic bear markets on the ATR model. Bear market influences the cycle. Liquidity influences the cycle. Look at how the Bitcoin price follows the yellow line. And it's about to do it again. And look where we are. We're already very high, and we're about to go a lot higher, ladies and gentlemen. This is what determines markets, okay? Not 18.6-year cycle. And my final point on this, imagine you are a young investor, all right? You have maybe 40 years to invest. If there's a lot of people here on the channel, there's people who are like 18, 20, 21 years of age, 22 years of age who started investing, and they're building things like Tesla bags and Bitcoin bags. That will be so beyond life-changing. These people will be retired by 30. It's going to be incredible. But imagine you're pinning your hopes and dreams to an 18.6-year cycle. Consider it a 20-year cycle. That means you got 2 investing opportunities in your life, okay? One on the left, and you got to wait for 18 years, and then the second option, you're a little bit older, okay? That's not cool. That's not fun. That's not how markets work. No offense to any believers out there. Remember, markets change so fast, driven by so many factors. Don't wait for the 18.6-year cycle. Next question. Thank you, Ged, for the question. And this is from JT87. Hey, James, thanks for all the work you do. Really appreciate it. Would really appreciate your view on Palantir Technologies as an AI play. It still has a lot of room to grow. And more Palantir questions from numerous Cypher. I've seen a lot of hype on PLTR. Curious, have you changed your stance on them at all? Some investors I really respect think it has a big future. So I have my rules when it comes to certain assets, and certain things I don't do. Like I would never invest in a Philip Morris tobacco company or things that kind of whatever do things. Anyway, I won't get into that. But Palantir, this is interesting. Peter Thiel disposes of $1 billion in Palantir so far this year, and he is selling a lot. And maybe it's at the top. I covered this actually in a question or in a video yesterday or the day before. I can't remember what day it was. But one of the things, when you look at Palantir and the technology, they really focus on data analysis. And it's not as focused on fundamental AI research and development. And Palantir's core product is software and data analytics. Now you got other companies, they focus on embedded AI, real use case, not just pure analytics. So it's not, I know people go mad when I say it, it's not a true mini AGI play. And that's where I want to be. Okay. Palantir will never power robots. Again, they work for the government to analyze what people are doing and saying. That's kind of their play. And yes, they now have started layering in some AI on top of that to help come up with better decision making and identify things that are anomalies. Like somebody goes buys a ton of fertilizer out of the blue. What's that for? They can find it. So that's kind of what they do. But the thing that really bothers me about this company is how much stock-based compensation that they pay It is beyond egregious. So pink is the stock-based compensation. Oftentimes, it averages about $1 billion a year. And yes, I realize you got to pay stock-based compensation to attract talent, but that is extremely heavy considering if you look at the net income in green, which is actually always red, they pay, if you aggregate all of the pink versus all of the red, basically it's doubling. They're losing a ton of money and they're paying out a ton of money to stock-based compensation, which I just found egregious for years and years. And I don't like that. I don't like the management structure that does that. That's not cool as far as I'm concerned. So would I touch it? Nope. I touched something else instead, called Tesla. Now, FKA Zeroth. Hey team, with the migration from MATIC to POL underway, could you cover the process and any potential changes, good and bad, especially to the tokenomics, the crypto compendium score? Thank you as well, DB5430. Great question. First of all, you see this a lot. This is where tokens that are desperate to revive themselves, they'll rebrand themselves. This happens with businesses all the time too. And this is a beautiful little meme. Shout out to Discord, who I shared it last week and then I couldn't find it again. Somebody found it for me. Thank you so much. I can't remember who did it, but same game, different name. Sure, it's an exact copy of the old token, but we changed the ticker. Again, that's exactly what has happened. Don't be fooled. It's the same thing, all right? It's not a better thing. Now, there are a couple of things that you need to be aware of as well. Tokenomics have not changed at all. There are things that if you have the Polygon POS chain holders, that should be an automatic migration, no action required. Now, I don't own Polygon, so this is just stuff I read. I could be wrong. Do your own research. Ethereum chain holders, manual migration using Polygon portal interface. And ZK EVM chain holders, bridge tokens to Ethereum and follow Ethereum process. I mean, I'm a busy guy. I got no time for this crap. And this is why I go back to this. Funny, it dovetails nicely into our beautiful little graphic. Layer 2s are Bandaids on a sinking ship. It's just too bloody complicated. All this stuff you got to do and jump through hoops and everything else. What else we got? If you have a ZK EVM, you got to bridge tokens to Ethereum, follow the Ethereum process, centralized exchange holders, most will handle the migration automatically, and the initial supply is still 10 billion tokens, and the conversion rate's 1-to-1. So basically, same name, different name, same game, same thing. Nothing has changed. So thank you for that question. And favorite part of the week, Lou is a mule deer. This week we donated to the Southwest Wildlife Center to help support care, food and shelter and medical for the following Lou. A young fawn whose donor had named him Luana, not knowing he wasn't a male. And then he became to be known as Lou. That's cute. And he loves apples. So thank you all. And thank you to the team as well behind me that makes all this possible every single week too. And DCA tomorrow morning. A lot of talk about what's going on with FTX. I don't know. I don't have any FTX exposure, but be careful of scams out there. But we'll be digging into it as well. What's real? What's not real? Is 16 billion coming into the market? If you go to crypto Twitter, all you'll see is 16 billion coming on Monday. It's not. Money will be trickling out. Institutions first, retail second, probably October, maybe. We could be wrong. I don't know. Something before the end of the year. Anyway, we'll talk about that and many other top items. Mando is moderating tomorrow. Marty will be there, CTO, and myself. So be ready for that. And don't forget to hit the like and subscribe. I'm going to do some live questions now from the whole gang. And, wow, that was 60 nuggets. And now it's time for me to get some questions. So, first of all, Doc Intern, you're back again. How come BlackRock convince its investors to keep their billions in the ETFs only to lose 40% in the bear market? Do you think part of the reason behind the massive Bitcoin manipulation is to eliminate the 4-year cycle? Interesting question. As you know, my thoughts on this have always been the fact that every halving, the impact of the halving is less. There'll be diminishing drawdowns over time, but also diminishing upside at the same time. And I think the constant bid coming into the ETFs, remember, we're still early, could keep this thing afloat and definitely will prevent the vicious drawdowns we've seen of the past. I don't think they want to eliminate the 4-year Bitcoin cycle, but I do believe there will always be cycles, but they'll be less amplified as we go forward. So we'll see. There also, I must give credit to BlackRock because they've held the Coinbase feet to the fire by basically making sure they reflect everything within 12 hours on chain when it comes to buying and selling Bitcoin. So that's a big positive as well that I see coming out there. So remember, BlackRock are in this game to bring in as many assets as possible. They make money by holding assets and charging fees for that. We'll see. And convincing investors, it's the same as buying any other asset. You just trust the biggest money runner in the world. Some people may not, but I don't think people have a problem doing that. Happy feet. Hi, James. We are at 70% Bitcoin, 15% Sol, and 15% Tesla. At this stage of the bull run, would you personally sell some Bitcoin and buy up more Tesla? Yeah. The time to do that, by the way, on 4th of July, when I made that video saying, I think Tesla was at 167, Bitcoin was at about 69K, and I said, this is the perfect time to do that. I do believe there'll be a lot of choppiness for Tesla. But I also believe 2025 will be great for Tesla. It'll be good for Bitcoin too. But it all depends on the relative price. Now they're kind of coming into parity once again. I mentioned the MicroStrategy Tesla ratio, 0.69. Right now, they're basically tied because the prices have rebalanced. Bitcoin's gone up. Tesla's gone up. But I think next time there's a big Tesla dip or a big Bitcoin spike, or both, then reallocate and try get to at least 25% Tesla. I think that would be a good position. And remember, that will far outperform, I believe, Bitcoin over time too. So that 25% will become a lot more. I hope that helps. And you see my allocation posts all the time. Every week I share my exact allocations on Patreon. Make sure you keep an eye on those too. Viciously, hey, Sensei James, if Tesla pulls off FSD on 1010, does this change your game plan for profit taking on Tesla? Millionaires are made in the bear market, and I'm curious in your plan of execution. Well, Viciously, as you know, Tesla is my keeper bag. I'm more attached to holding on to Tesla than I am to Bitcoin, believe it or not. I'll always hold some Bitcoin, but I have no plans on selling Tesla. I know over the next 4, 6, 7 years, I don't know what it's going to be, that thing's going to 10x. And that's kind of my safe 10x bag. Who knows what's going to happen with Bitcoin? Bitcoin will 10x too, but the question is at what level? And the key is, again, like per Happy Feet's previous question, everything is about relative valuation and time based on those things. I do plan on rotating out of crypto, out of miners and things like that into more Tesla, but I hope it doesn't run too much in the meantime. But I do not plan on selling any Tesla ever. I will hedge it, like I mentioned as well, on big mean reversion spikes, but that's it. B-Man63, thank you for all that you do in the AI community. I noticed IV for CleanSpark is high. Is that the volatility? But the price hasn't moved a lot. Time to be bullish, neutral, bearish on this asset. I think all miners are down and depressed. As I've shared, they're all diluting like crazy. Every time they dilute, they suppress price. So if you imagine CleanSpark is at $20, it does 100% dilution, it'll go down to $10. That's just the simple mathematics, and that's kind of where we are exactly right now. Not that they've done 100% dilution, but definitely 35%. But a lot of people are concerned right now because the hash keeps on growing, and the fees for Bitcoin and the money they're making are not what they used to be. So there's a lot of fear. But remember, when Bitcoin spikes, Bitcoin miners spike more, and we'll be ready as well. So just be patient. Everything has their cycles. We talk about the 18.6-year cycle. Now we've got cycles within cycles for distinct assets within the same category. MicroStrategy has been like a rocket ship. Miners have been the toilet. And I think, what is it? I calculated the relative size of my MicroStrategy. My MicroStrategy position is like 21 times the size of my miner position. Just for perspective, everybody. So yeah, it'll come back, but then be ready. Have your finger on the trigger. Charles Kincannon, please explain how inflation can remain at 2% when the money printing continues. Even R. Paul said it recently. It doesn't make sense. It doesn't. So the inflation numbers that you read from the government are complete crap. They're BS. They give somebody a clipboard and they walk around a grocery store and they look at select items, excluding things like coffee, because that's very inflationary. And then they look at owner's equivalent rent, but they look back at data from over a year ago. It's just all complete folly. But we'll see. But things are definitely going up in price. You look at your car insurance, you look at your electricity bill, look at your price per kilowatt hour, all that type of stuff. Things are going up. Look at college education. And don't believe government numbers for a second. And the money printing, by the way, a lot of the money printing is happening, but it's happening in a stealthy way. Like money's going over to weapons to go different parts of the world. Money's going to bail out banks through certain facilities that they have in play. A huge amount of the GDP growth is from government spending, but that's not trickling down to retail customers. Therefore, they don't have the cash in their back pocket to go buy all the apples and blueberries at the stores, so it's not going up. So there's a big lag between the actual money printing and how until it eventually hits the retail pockets. So that's the other big reason for that too. Thank you for the question, Charles. Thank you for your super sticker, Bottle of Red, Angle Blackson, Swiper No Swiping, Andy, Signal 103, Forrest M, Jules, and DBF430. Thank you all for coming. Big show. See you tomorrow morning. And thank you to the mods in chat. You all rock. Have a good night.